All right, good morning, Checkmate crew. It is 30 minutes after the opening bell of the New York Stock Exchange. Today is Wednesday, December 21st, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, so let's get started today. First things first, I wanted to go over, from yesterday, we had one of our members point out that the United States Department of Energy just bought or just awarded a series of purchase orders to some of the uranium producers here in the United States, and there were some companies. UEC was one of them. That was the one that was mostly on the news. But our stock UUU Quad U Energy Fuels also got awarded. It was $18.5 million a purchase. The actual amount wasn't stated on the company website. So if you look at UEC got awarded $17.5 million for 300,000 pounds. So 18.5, we can assume that it's going to be like, I don't know, 330,000 pounds or something like that. So that's great. And that is well under what they have already in inventory. They have an inventory facility in Illinois, and it's got about, I want to say it's got about 1 million pounds. It's either 700,000 or 1 million. I know they recently purchased some uranium as well too. So I think after the purchase, it becomes about 1 million pounds. So it's still well under what their inventory is, and so they're definitely able to give this uranium to the strategic reserve. At the same time, still have enough in inventory for additional purchases maybe in the next couple of months. So as far as their supply is concerned, I'm not too concerned about that. Although at some point, if they do start ramping up sales, they will have to start mining some more uranium, which they have already started doing. We already saw that in the earnings report. Their costs are going up because they are doing some maintenance on those mines to start mining. Okay, so they're uranium companies are like that. They shut down their mines when prices and demand goes low, and then when demand and prices go up, they have to go through some maintenance, and then they restart mining activities again. And so we're at that stage where they're starting to see longer term demand, and they're starting to ramp up their mines and their maintenance so that they can start mining again. So 18.5 million, 320 to 330,000 pounds of uranium going to the strategic reserve from Quad U. That is our stock. Right now, it is my break even is just around here, around the 6 zone. So let's see what happens. And again, I'm still wanting to sell covered calls. When it gets to around this 750, 760 zone, I'm going to sell some covered calls out the money. And I may, depending on the strength of energy sector just in general, and metal mining and the Australian dollar, I'll consider collaring it using those covered calls to buy puts. But if we're in an uptrend in the Australian dollar and in metals in general, I may hold off on collaring. I may just sell the covered calls and just let the shares ride. We'll see. We'll see what happens. We're not there yet, so it's all just anticipation of what could happen. Okay, so that is Quad U. All right. Speaking of Quad U and energy, let's take a look at natural gas. I know some of you guys are in the natural gas trade. We did see a little bit of a pop this morning. People were getting real giddy about this. During this season, it's really tough to trade this, just because anytime there's like a weather report or something, you're gonna see big movements in natural gas just from stupid weather reports, or something that some weather event that happens. Apparently, there's this like superstorm that's about to. It's already hitting the United States. Some parts of the West around Washington have been swamped with snow, and that storm, it's moving its way to the Midwest and to the South. So some of you guys in the middle states, you're about to get snowed in, and then the East Coast will get this storm sometime around Christmas Eve or so. And so I don't know if that's the reasoning why nat gas popped up in the earlier session, but it's already losing it. These kind of things are already seen way in advance. So if you can see that the weather is going to be bad in a week, I mean, some of these professional traders, they've already seen, you're not the only one that sees that. So you have to be kind of careful, regarding, you just have to be careful when you trade this kind of stuff. Okay. A lot of people already see what you're seeing. So, to think that you have an information edge just because you see the weather report, I think is a little bit ludicrous, but that's just me, okay? Oil does decline. It does have a decay. I don't know if actually, is there a contango decay right now? Probably not. Let's take a look at the term structure for natural gas. No, there's a little bit of backwardation. Okay, there's a little bit of backwardation. So there is tailwind in owning oil right now. Although if you're in options with such high implied volatility, you're still facing some decay on your options. But hopefully, I know some of you went long on this. I almost went long on it, but luckily my alert didn't go off, or else I'd be in a drawdown. But after looking at the options chain, it looks like spreads are the way to go, just because of the IV decay. You need something to offset that. But yeah, I mean, this is just because the weather is just going to get colder doesn't mean this is necessarily going to go up. Again, most traders can, if you can see it, I mean, that means most professionals have already seen it coming. Okay, so that's that. Crude oil is marching higher. We're at these levels again, and we're backing off from about a week or two ago. No, this is about a week ago. So we'll see. It does look like on the daily chart it's making a higher low. Will it make a higher high? We'll see. All right. By the end of the week, if it curls back up again, potentially we might see oil go up again. We do have a big OPEC meeting coming up in the first week of January, so I don't know if this is anticipation for that. Most professionals are expecting there to be a production cut in OPEC. So it could be one of those buy the rumors, sell the news events. So be very careful about this, guys. If you're going away on holiday, maybe it's not the best idea to leave full crude oil positions running while you're gone on holiday. Okay, so maybe that's not the best idea, but manage risk accordingly. I'm still waiting on to get in some of these names. We talked about some of these energy names. CPG is one name that I really want to get into, Crescent Point Energy. It is not falling to our level. I really was hoping for somewhere, I was going to leg in maybe around the low sixes and potentially even around 550 or so. High sixes to 550. Low sixes to 550 zone. I was really hoping that it would fall down like this, but it's not. So we'll see. We'll see what happens. I'm going to be very patient on this. And, and also, too, around January, February or so, it's very likely we're going to see some supply of distillates like diesels and stuff increase with all of the production that some of the refineries have done. I do think that we might see inventories increase around January, February. That may be when we see that kind of final washout in oil, and maybe things get pushed down, and then finally we might have some seller exhaustion at that point. But I don't see that right now. Okay, so again, this is something that we're gonna have to be, in my opinion, we have to be really patient on. and hopefully we get that trade. I'd love to get into this. This is a little bit more of a speculative play, but again, they're increasing their free cash flow, increasing their earnings per share, they're increasing their dividend, increasing their share buyback program. It is, though, a smaller company. Okay, it's one of the more junior oil and natural gas producers. So it's not like it doesn't have the safety of, let's say, something like Chevron or something like that. Okay, so it is a little bit more speculative, but I think the risk is justified. Okay, I think it's the reward to risk is there. We just need a pullback to get a maximum value out of this. All right. So that's the CPG trade. Let's stick on this energy theme here and go to some of the natural gas tankers. I'm in FLNG. I told you guys this on the Discord. I alerted you guys 2 days ago about this. So far, so good. Okay, so far, so good. We're in the 25 calls. All right, and I think we're up about last time I checked, it was a good amount, like 5 to 10% or so. Yeah, around 5 to 10% or so we're up, and so it hasn't really moved up all that much here. Maybe about 3% or so. Okay, so it's about about 3 to 1 leverage. Okay, I get about 3 times the leverage on this. Now that leverage that leverage becomes more and more pronounced as we get higher and higher. As we get higher and higher, I'll get paid more and more. But again, my plan still hasn't changed. Once we get to around the 38s or so, I want to sell some out the money calls and make this a poor man's covered call. Right now, I'm looking at January or the February contracts. Right now, there's not enough juice on any out the money calls yet. But once this thing goes up to 38 or so, we should see some of these call prices increase, these out the monies, and definitely I want to be taking, definitely selling some covered calls to reduce my cost basis over time. I keep doing that, and hopefully at some point these will be at a minimum cost or possibly even free, and then we just let them ride. And that's a good way of participating in a capital efficient way, something that you have high conviction on. And so this is definitely one of those names. Speaking of the tankers, STNG is another one that I want to get into. I'm saving up some ammo. I didn't shoot all my ammo or my whatever I allocated toward the tankers. I did not buy all. I did not use all of them on FLNG. I am saving up some ammo for STNG, which is an oil tanker, and if it can get down to let's say around the 49.75 zone, that I think would be a pretty compelling place to get some longs here. Okay, I am willing to get long right here. We'll see what happens. Remember, we looked at STNG, their earnings and their tanker rates, and how it had a huge premium over the spot market rate. And so this is one of those companies that can command that type of premium. And so that definitely is something that we want to be in. It's a strong player in a strong market, in a strong sector, macro-wise. And so I think that's a pretty compelling buy if we can get to that zone. But again, we have to be patient. We have to be really patient on this, okay? Speaking of which, since we're on this tanker topic, we might as well go over Baltic Dry Index. We're seeing this go up. Now, there's all this rumors coming around about China reopening. They just announced that instead of this a huge quarantining requirement, their quarantine requirements are now down to 3 days. Well, that's the media. That's the media talking. I tend not to believe anything media related coming out from China. You have to be a little bit skeptical of it. But if that is true, that would definitely be tailwinds for the container space, also the Baltic Dry Index. You know, we're going to see a lot more activity back and forth. So we may see the Baltic Dry Index go up, and we're already starting to see that. BDI on a weekly basis has already made a higher low. In the next couple of weeks, will it make a higher high? Ooh, that would be interesting. That would be interesting. That means that shippers or people who ship goods back and forth, they're already getting ready. They're already locking in container rates. They're already trying to buy and reserve charters and things like that. And so if that's the case, you know, that would definitely be a sign, one of the signs that, you know, that the China reopening is quote unquote real. But again, as always, whenever I talk about China, you know what I'm going to talk about. I'm going to talk about the Australian dollar. Okay. So the Australian dollar is, you know, making this on a weekly chart. It is kind of, it does look like it's curling down, but if we look at our levels, okay. If we look at our levels, all right, we're under this level right here. And I said that on the weekly chart, if Australian dollar, if it pulls back and if it can stay above 0.640 and make that higher low and curl back up, again, that would be a positive sign that we're going to see some tailwinds out of China. You know, it doesn't have to go down there. Okay, it can just stay here and then just curl up too. Okay, and again, that would also be a bullish signal and tailwinds from China. Okay, so I'm watching this as a forward indicator. Usually, the people that make business decisions in China, like the big banks and the people who facilitate trade, they see this well ahead of everybody else. All right, and so China buys most of their natural resources from Australia. So whenever there is this anticipation of increased industrial activity in China, you know, the banks, the big banks, everything, they start loading up and hoarding Australian dollars in anticipation of this, because you know, their clients are going to have to use Australian dollars to buy all these natural resources. So this definitely going up and still going up, and if it can close above our make or break level and still, you know, stay higher than 6.640 and then make that higher trend, if that's the case, then, you know, it's a pretty good sign that you know, the Australian dollar is going to be in demand for their natural resources, which means it's probably coming from China. All right, so the China trade that we have been looking at for I don't know how long is ZTO. I talked about ZTO when it was around $22, $23, and I said, oh, if it gets to 20, I'm gonna buy. I just should have bought then. It's at 27 now, and it doesn't really look like it wants to pull back, does it? No, it really doesn't look like it wants to pull back. It would be such a shame if it just consolidates here. But if that's the case, if it just consolidates here, then we may have to revise our buying target. We may have to raise it just a little bit. Again, we're not there yet. I'm not willing to raise my buying target yet. I still think that we do have a chance for a corrective movement in the market, maybe around January or so for China. I'm not sure, to be honest. You know, nobody can predict the future, but if it gets there, definitely, I mean, I'm buying hard when it gets to here. Okay, so Australian dollar though will tell us the way. Okay, this will tell us the way. All right, there's no need to guess. Speaking of Australian dollar, if we talk about Australian dollar, we got to talk about metals too, right? Gold and silver and all of this. I mean, talk about silver. You know, silver made a huge move yesterday. Now it's just pulling back just a little bit. I'm surprised that it's only pulling back this little. I would have thought it would be a little bit deeper than this, but that's how strong the silver market is. Gold is up today, also very surprising. Australian dollar is up, so, you know, I guess that shouldn't be surprising. But with silver coming down, I did think gold would come down as well too, but it's not. So it is what it is. We're gonna see, I think, I think, if some of these risk-on currencies pull back and the dollar moves forward, we could see some of these metals come back. And again, this is kind of the level that I'm looking at, the 1740 zone. If gold can come back down to here, we're going to see some of the miners pull back as well too, like GDX, SILJ, all the names that we want to get into, right? The ETFs for leap strategies for poor man's covered call writing. I would love to see this come back down to around the 26 zone. Again, my main play is going to be SILJ, the silver junior miners. I'd love to get into the silver junior miners under $10. And if junior miners is not your flavor, then you can always use some of the more major silver miners around 2650 or so. That would be a great entry point, great reward to risk. My plans still haven't changed. I'm still going to be very, very patient on this, and hopefully we get a good entry at some point. For those of you who don't like options but want a leverage play, I mean, you could always do JNUG, but be careful of JNUG. I mean, I think it's like a 2x leverage. I don't really like leveraged ETFs just because they behave so odd when there's like a lot of volatility in the market. They're just so odd, and also too, I mean, Direxion is like one of those companies that's like known to not manage risk properly. ProShares leveraged ETFs tend to have a better reputation than Direxion's. I know some of you guys via DM asked me about JNUG. Would you get involved in JNUG? I personally don't. I use options for leverage. Okay, I find that I understand options way more than I do a leveraged ETF and how they manage it on a day-to-day basis. I'd rather control the management of that, of the Greeks and everything, time value, all that on my own. I don't like to rely on somebody else to do it, especially a company like Direxion. So I mean, if this is how you want to play leverage, you can go ahead. I know a lot of professional traders who use JNUG as well too. Nothing wrong with it, but just know when you buy and hold this thing, you are going to face some serious decay. So you have to get in and out, not in and out on a daily basis per se, but you definitely want to get out before a trend reversal. Okay, you have to manage risk. I know some people who buy JNUG, they'll be very, very patient. They'll play JNUG maybe once or twice every 2 years or something like that. Once or twice a year or every 2 years, and they'll sell covered calls on a trending move, and then before the trend reversal, they'll just get out. You can do that too. There's nothing wrong with that, but you can't just buy and hold this forever. It's not one of those kind of things. Okay, just keep that in mind. So that's my precious metals play. Okay, so that's that. What else? Oh, the dollar. We might as well look at the dollar because we're talking about this here. The dollar, for some reason, the dollar is just not cooperating. It's not going up as of course, when I bought the UUP, I was doing it as a hedge, but still, it would have been nice to get out and exit with a profit, but it is what it is. I'm using it as a hedge. So whenever you use something as a hedge, you have to expect that it could go to zero. But it would be nice to see this again for our precious metals trade too. I think if the dollar goes up, we could see precious metals fall back a bit. That would give us a great entry, but we'll see. Okay, we'll see. I do think that we have a very good chance. It does look like it's basing right here. This dotted red line is the weekly 2 standard deviation Bollinger Band. Let's actually take a look at that. I haven't updated this chart in a while, so oh, look at that. The 18-day moving average is now right here where our first level was, our first buy level target for dollar. Now it's moved to that point. If we go to the weekly chart, okay, let's see here. Let's see. Yeah, it's right there now. That's this 2 standard deviation Bollinger Band. It's right there now. Okay, so we're just bouncing between these levels right now on the daily chart. Let's go back to the cleaner one. Oh, it didn't update yet. But okay, so we're looking at. It did update. Okay, never mind. So yeah, we're just bouncing between these two levels. These two levels where it's kind of the buy zone, where this is the area right here. Hopefully we do see this curl up again. Just to we're gonna face a drawdown on quad U and some of the stuff that we're in, but I don't mind. I'd rather just cash out of those hedges. I do have a higher conviction on those quad U and such, but I would like this to come up so that we could cash out our hedges for a profit and get into some of those precious metal names. That would be nice. But again, it doesn't have to happen. That's just what we want. What we want and what the market's going to give us are two totally different things. So we'll see. I think though to see whether or not this is going to go up, I think it's really going to be dependent on the 5-year Treasury bond yield. If the 5-year Treasury bond yield, oh, look at that. These are our levels. This was our dash for cash level. Remember back in the summer? I said if it breaks down here, dollar's just going to go crazy, and then we're going to see the market sell off. That was September. Yeah, remember this? This is our this was our dash for cash level. We just came right up to the dash for cash level, and now we're falling. Now, if this falls again, if this falls and visits this area again, yeah, the dollar's going to go up. Okay, the dollar's going to go up. We're going to see some risk off in the markets. Okay, definitely. So I think it's really dependent on the ZF. Okay, ZF goes down, the dollar's going to go up. If this keeps going up, then we might see some more headwind pressure, some selling pressure on the dollar. When the Treasury bond price goes up, yield goes down. Okay, so there's still a lot of dollars and cash in dollar denominated accounts overseas. All right, and that money is what's fueling all this the rally for the last couple of weeks as interest rates pared back down. But if we see the short-term interest rates go up again, then we're going to see that dash for cash phenomena again. I don't know if that's going to happen again or not. Again, there's no reason to guess. The market will tell us. ZF will show us what's going to happen to the dollar. Okay, so I'm looking at I look at Australian dollar for China and for the metals. I'm going to be looking at the ZF futures for indicators on what's going to happen to the dollar. Okay. So keep this in your radar, okay? If you're trading anything dollar or risk assets, I think ZF is a chart that you guys need to look at. Okay, ZF is back on our radar as something that was at least on my radar is something that I'm going to be looking at least on a daily basis for signals on the dollar. Okay. So that's ZF. Okay, so we talked about all that. Crypto. I know a lot of you are still very interested in trading cryptos. You know my approach. I'm very, very patient about this. We're still just bouncing around these levels here. Really, there's nothing much to say. I mean, it's just bouncing around for the last 1, 2, 3, 4, 5, 6 weeks. For the past 6 weeks, it's kind of just been doing this around our zone right here. I'm still waiting for this gold, the Ethereum gold ratio. I'm still looking for this. That is where I want to be getting long. I think everything else is kind of just no man's land. You really don't have that reward to risk edge. I looked at the OI for Ethereum options, and we're not seeing any meaningful change in that. So it's still quite low. It is what it is. We can't really get any edge out of viewing options. As I mentioned before, we want to see about $6.5 to $7 billion in open interest on Ethereum options chain before we use that as a way to see what's going to happen, what's likely going to happen in the Ethereum price structure. So we're nowhere near there yet. It's going to take like if it rises, it's going to take a couple of weeks at least. Okay, at least. So I know that there's a catalyst coming up in March, I believe. One of you all mentioned, or one of our expert crypto traders, MSC, he mentioned that there's a catalyst for March where you can withdraw staked ETH. I don't know if we're going to see any type of speculation around that, but if we do, chances are we might see that starting in the new year. So that actually coincides with when I think we might see a small rally in the NASDAQ stocks. I do think that sometime around February we might see that. I've been saying that for a couple of days now. I have my reasons for that. The setup is there, and as we get closer and closer to that, I'll share what's going on. But we might see like a pullback first before that happens. Okay, so I'm not in any of those trades yet. Okay, and if I do get into a trade, it's going to be a very short-term trade, like a swing trade that lasts for maybe a few weeks, maybe a couple of months at best. Okay, and I'll probably be using a leap strategy, getting in and out of a leap. Most likely not a 2-year leap, but maybe like a 1-year leap, or maybe even 6 months in the money calls, deep in the money calls, or something like that. But we'll see. It really depends on what the market gives us at that time. But if we look at the growth to value chart, it's still going down. So, we are still looking for value to outperform growth. As far as our liquidity data, we are starting to now notice that we're seeing a curving down of the junk bonds ADL line. This is a huge warning sign if the market keeps going up. Okay, if the market right now, the market's rallying. How far are we up right now? We're about up 1.2% in the S&P 500 right now. If the market just keeps going up, let's say past 4,000, and the junk bonds ADL line is still decreasing. At the same time, we're seeing the New York high-low line still curling down. The New York Stock Exchange advanced decline line actually is moving up a little bit, but if it comes back down, if all of these liquidity signals that we have point down as the market is going up and it hits that 40, right above 4,000, like that 4,050 zone, I'm going to buy some puts on the market again. Okay, so I'm adding that to my plan. S&P 500 above 4,000, around the 40-50 zone, the 4,050 zone. All right. If we get there and our junk bonds ADL, our junk bonds advanced decline line keeps curling down. If it keeps curling down, at the same time, our New York high-low line keeps curling down as well, and we get to 40-50, I'm buying puts. Okay. I'm buying put spreads, debit spreads, at least 3-to-1 reward to risk. And depending on, what the IV is and everything, that and I'm probably going to buy it for a month or 2 months out at that point. We'll see when we get there. Okay. But that's my plan. All right. Any questions, comments, rude remarks, anything else you guys want to look at? Ooh, I see ETH holders all-time high. What does that mean? ETH holders. Oh, you mean the number of people holding ETH is at an all-time high? I don't know. I don't know if and with ETH and with crypto, you have to be very careful with those kind of statistics with how many, if it's wallet holders, for example, I can open up 5 different wallets. I could have all my ETH in one wallet, and then one day I can just separate it into 5 different wallets, right? And that would increase the quote unquote number of holders, right? If that's how they measure it, then, you got to be careful because that might not mean anything. All right. So hopefully that clears things up. Okay. Well, then in that case, if there's nothing else, let me just check one thing here. Yes. If there's nothing else, then in that case, we'll wrap this up here. That wraps up our session of the morning market memo. Our Discord invitation link is in the description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, well, I'll be back on tomorrow, Thursday, 30 minutes after the opening bell of the New York Stock Exchange. That will be our last session before Christmas. And then next week, we'll be back on Tuesday, Wednesday, Thursday, as always, 30 minutes after the opening bell, 10 a.m. Eastern time. And we will go from there. Trade safe, guys. All right. Manage your risk. Next week is going to be a low volume week. All right. So manage your risk accordingly. You know, there's no shame in having no positions going into next week. Okay. Next week, we're probably going to see big movements up and down as volumes are low. Most people are going to be taking a holiday. So, stay safe out there, and I'll see you guys tomorrow.